Good morning, crypto fam. It is July 18th, Friday, 2025, and the markets are waking up hot after another explosive 24 hours. If you thought the rally was running out of steam, think again. From institutional Ethereum grabs to altcoins preparing for moon missions, and even political plays from President Trump that could reshape crypto's role in retirement planning, we've got a loaded video for you today. Buckle up, let's break it down. Let's start with what's being dubbed as the XRP ignition. XRP shocked the market over the last 48 hours, blowing past long-standing resistance levels and surging over 39%, topping at roughly, let's take a look here, roughly $3.64. This marks a full reversal of sentiment that has plagued the token for years as it battled the SEC in court. With Ripple now operating under full regulatory clarity after last month's landmark ruling, institutional capital is clearly pouring in. Derivative markets have exploded with open interest reaching 1.3 billion, daily volume doubling, and strong support above the $3 mark. Traders say this isn't just a pump, it's fueling renewed optimism across the entire altcoin space. Speaking of altcoins, Stellar's XRP is stepping into the spotlight in a big way. It's mirroring XRP's movements 1-to-1 nearly, climbing over 75% in the last week, and now analysts are pointing to the potential 35% upside setup that could send XLM towards $1.10 to $1.20 range in short order. In this article posted by Cointelegraph by Yashu Gola, I'm sorry if I mispronounced that. Let's see here. It says the upside target is derived by adding the triangle's maximum height to the breakout point. Momentum indicators also support the bullish case. The relative strength index, RSI, on the 4-hour chart remains below overbought levels, suggesting room for more upside. XLM continues to move above its 20, 50, and 200 4H exponential moving averages, EMAs, all of which now slope upward. This alignment adds strength to the short and medium-term bullish outlook. The short-term bullish pattern aligns with macro accumulation structure highlighted by veteran trader Peter Brandt. Brandt says that XLM could be the most bullish chart in crypto market, but only if it decisively closes above the $1 level, a horizontal barrier it has tested but never broke with conviction. Open interest in Stellar is also surging nearly 600 million today, which signals strong speculative movement, but also warns us to brace for possible volatility, as remember, high upsides usually come with high risk. One of the biggest stories flying under the radar, an article posted by The Block, Bit Digital acquires 19,683 Ethereum in a single swoop, growing their treasury to nearly 120,300 Ethereum. That's nearly 436 million at current prices, after sending proceeds of nearly 67 million share sale on an additional, like I said, 19,000 coins. But what's the company's rationale? Ethereum is increasingly being viewed as the backbone for the next phase of digital finance, from institutional staking to regulated on-chain products. It's a bold bet, and it's great to see Ethereum getting the kind of serious institutional adoption that Bitcoin has long enjoyed. And that brings us to Ethereum's killer week. Ethereum is now trading at $3,600, roughly. At least it was yesterday. It's down to $3,571. At its peak, it was at $3,660. That is incredible. Up nearly 14% just this week, driven by a massive wave of institutional inflows and ETF demand. Data from on-chain trackers show whale wallets accumulating tens of thousands of Ethereum this week alone. One address withdrew 27,000 Ethereum from Coinbase in a single transaction. Another address, likely tied to a fund or a trading house, scooped up over 68,000 Ethereum across multiple centralized exchanges. And there's more. Ethereum ETFs saw their biggest single-day inflow, topping at 525 million yesterday. That's a clear sign that traditional asset managers are finally warming up to Ethereum, alongside Bitcoin. It's not just about the price. This could mark the beginning of Ethereum decoupling from Bitcoin's dominance and leading to a new altcoin-led leg of the bull market. Now, one coin that's kind of quietly been heating up is Cardano's ADA. Technical analysis analysts love it right now because multiple charts are lighting up like a Christmas tree. We've got a full golden cross on the daily market, bullish MACD crossover, a Bollinger Band breakout, and even a volume-supported bull flag pattern. ADA is currently trading at around 85 cents, but projections from seasoned analysts suggest a run towards $2.70. Let's see here. Let's read this. It says, despite the impressive run over the last few days, ADA's price has steered nearly 4x away from its $3.10 all-time high from 2021. However, the price has set multiple bullish signals on different time frames, suggesting that the rally is gaining momentum. ADA broke out of a bull flag on the weekly chart, flipping the upper boundary of the flag, the 50-day simple moving average SMA, and the 200-day SMA into support as shown in the chart below. The measured target of the bull flag is $2.70, or a 216% increase from the current price. Additionally, like I said a minute ago, a golden cross formed when the 50-day SMA crossed above its 200-day equivalent last week, reinforces the case for a continuation of the uptrend. And here you can see the chart. Cardano has a history of explosive moves when these indicators align. In 2021, like I said, ADA went from $10 to $3 in less than 6 months, and traders are saying the conditions are eerily similar, and the smart contract ecosystem around ADA is heating up too. Are we about to see ADA rejoin the top 5 by market cap? We'll have to see in the upcoming weeks and days, and of course it is in the 10th position right now. It would have a ways to go to get around to the 5th, but you never know. This next story could turn out to be one of the biggest long-term catalysts for crypto we've seen since ETF approvals. According to the Financial Times exclusive, you can see the article here by Bitcoin Magazine, Donald Trump is preparing to issue an executive order that would open up U.S. 401k retirement accounts to alternative assets, especially Bitcoin, Ethereum, gold, and private equity. The $9 trillion 401k market is a powerhouse of U.S. retirement savings. If just 1% of that capital allocation flows into crypto, it would mean a $90 billion injection into the space. That order would instruct the Department of Labor to review outdated restrictions and empower plan administration to offer asset diversification beyond traditional equities and bonds. This is massive because until now, crypto exposure through retirement vehicles like 401ks and IRAs have been scarce, locked behind expensive custodial products or self-directed account setups. Now we're looking at a future where your HR department could actually add Bitcoin to your S&P allocation. And politically, Trump is clearly aligning himself with pro-crypto policy to bolster the tech and finance sectors in his 2025 agenda. So to wrap things up, is the altcoin season here? Let's take a step back. What do all these headlines have in common? They're pointing to the dawn of what many are calling alt season 2025. XRP's breakout is leading other legacy altcoins to wake up. Stellar, Cardano, and even under the radar names following technical signals not seen since 2021. Ethereum is roaring thanks to ETF flows and institutional accumulation. Government policies may soon open the floodgates of retirement wealth into crypto markets, and with Bitcoin dominance falling below 49% for the first time since February, it's clear the market is shifting from Bitcoin only to everything else. The takeaway? This isn't a pump. It's a structural shift in sentiment, liquidity, and access. We're witnessing the convergence of regulation, adoption, and in many cases, long overdue recognition of altcoin utility. Keep your eyes on the charts, your wallet safe, and don't let FOMO make your financial decisions for you. Thank you guys for tuning in. If you found value, don't forget to like and subscribe and hit the notification bell. And we'll see you guys tomorrow.